All right, and welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So, markets here with a pretty much a sideways week. So if we take a look on the weekly time frame, you're going to see we're basically flat there. So a little a doji candle, and overall a flat week, and just kind of a continuing to digest inside of this really tight range. If you look at an intraday basis, you can see we've just been in this range here from about 5450 to approximately 5500, with the exception of these little spikes here that we had obviously on PCE on Friday. Market did gap up but then gave back some of those gains. I don't think we're quite ready for another leg higher just yet, but I think the market is getting close. You see that 20 moving average starting to catch up to price, and that's usually an indication that price is ready to advance again. And you can see that, even pretty much on this whole bull run here and many other examples throughout history with these charts, the 20 moving average is kind of like the tide, and as long as the trend is intact, this generally acts as support on most time frames, and you're seeing that start to creep up there. So I'm continuing to look for that, and right now kind of the story is, to me, is rotation, and is that going to continue? So we had end of quarter, we had OPEX last week, we had end of quarter OPEX this week, and a lot of rotation and stuff moving here under the hood. So stocks like Microsoft, for instance, stocks that have had big runs, saw some declines on Friday. Even Apple saw a little bit of a dip. Now, these dips all came in the last, couple of minutes, so there's rebalancing that goes on. NVIDIA had a dip as well, although NVIDIA is already off the highs. But what I've been noticing, and I've been talking about this quite extensively, as a matter of fact, there are other sectors that are starting to break out, and there's other sectors that money is starting to rotate into. And one of those, I've been talking about this for probably the last month or so, is cloud software. So I showed you this chart a few weeks ago. Fund managers historically very, very underexposed and underpositioned to software, and heavily exposed to chip stocks. If we take a look at the IGV, what did the IGV do this week as the SMH pulled back? IGV is on breakout. Take a look at this weekly pattern. Very, very tight bull flag, picture perfect, pretty much textbook, and a very nice break higher. We can even see energy starting to pick up as well. Energy coming off the lows over the last week or so, and into, as the market kind of pulled back off the highs, energy held up. This is an intraday chart of Friday. You can also see the same thing on the IGV. We saw the transports here get an uptick. We saw sectors like VNQ get a very good bid into the closing bell, and believe it or not, regional banks having that big bid. We'll talk about those later. But again, as these big tech, high flyer tech stocks, look at the Meta into the end of the day, look at Google into the end of the day, look at Apple in the end of the day, Microsoft, we're seeing that money kind of rotate out and possibly into other sectors. And we'll definitely talk about the Russell 2000 you see in the corner of my screen there. Another sector here that had a ton of outflows in quarter two was energy. And that may be starting to change. I just showed you the chart of the XLE there. So we're starting to see that rotation continue. I've talked about that. And as long as that continues to go on, NVIDIA and the other Microsofts of the world can pull back, and this market can still hold up. Despite what everyone says, yes, NVIDIA has, for the most part, been the market, but it doesn't have to always be that. As long as money is rotating, rotation is the lifeblood of a bull market, and like it or not, this can continue as long as that continues, and it can continue as long as the Feds and the Treasury continue to pump money into the system. So this is not something, and I've been telling you guys this for months now, this is not something you want to fight. Every day we see another top caller out there. But the fact of the matter is, this is a very liquid market. Despite what they say, we're doing quantitative tightening, financial conditions are tight. we are not at all-time highs with financial conditions tight. That is a fact. You're going to see here, they're dumping reverse repo into essentially the stock market, right? It's not really a secret. And, people insist on fighting this. It's not a good idea. So market continuing to melt up here. Not so much this week, but I am expecting that at least throughout most of the remainder of summer. Personally, I think we will get a correction as we get closer to the fall, but we'll talk about that, when we get there. But right now, I'm still looking for another leg up here, and I think other sectors will start to take over here. But for now, short-term support at 54.50, and then 54 whole round number. If we were to have a bigger dip, your big level here is 53.25. The triple Qs just slightly made a new all-time high intraday on a Friday morning after PCE, and we did come back in. A lot of the selling, specifically in tech, I think was end of quarter stuff. We'll see. Does it come down to this trend line here? So we've got that marked on the chart. It doesn't have to. There's still support at 470 and the 20 moving average, but that would be the next big level I'd watch for on the triple Qs. The diamond here via the Dow, again, sideways week, but nothing really wrong. You got a breakup candle right here, and you're inside of that essentially. So a little bit more consolidation. I think that can push higher. Speaking of, before I forget, another thing that a lot of people like to talk about right now is equal weight, right? The equal weight S&P versus the actual S&P. And a big argument is that, well, the equal weight S&P is not breaking out. It doesn't have to break out. And speaking of, this is not a bear pattern here. So you have a big move and you just have a big wedge right beneath all-time highs. In fact, above the previous all-time high. This looks like a catch-up play. Same thing with the QQQ equal weight. You have ascending triangle, hammering on resistance here with higher lows. So again, kind of going back over to what I was saying before of other sectors taking over for mega cap tech. And as we segue into the Russell 2000, you can see here, this was the only index that closed green on Friday. This was end of quarter too. And you can see the pattern intraday. Yes, we pulled back with the rest of the market, but it actually got a bid into the close and it stayed green pretty much all day long versus the spiders, the Qs, and the Dow. So seeing money flow into small caps is a sign of risk on. It's not a good idea to be playing bear when money is going into risk on sectors. So again, Russell 2000, could we be finally seeing, maybe it's a dash for trash, maybe this is the maybe we're getting close to the blow off. It certainly could be the case, but the thing is with these blow off moves, the most amount of gains are made in the shortest period of time, and you don't want to be on the wrong side of that. But either way, IWM up on a day where tech was down. And again, these narratives continue to fall apart here. So we're watching this wedge here, higher lows. If Russell breaks out, I could see it going into 220, 225. Still has not done it yet. Still got to get through that 210 area. But these are the things I'm watching here. All right, so chips, again, continuing to back off. I think chips are pretty much done for the most part. That doesn't mean they can't inch up a little bit. But I think the highs for the most part, maybe even for the year, are in on chips. IGV, again, you guys know I love this sector. I've been telling you guys about this for the last couple of weeks, if not months. And beautiful breakout there. That is continuing higher. Again, same pattern here into the fall last year. Breakout, 2 quarters of consolidation. Very good move. So 88 to 89 is short-term resistance, but I've got a price target of 92 on the IGV. Again, Dow Transports. Everybody's talking about, oh, Nike earnings is a sign the economy's crashing. Maybe. I mean, the XLY was red on Friday, but Dow Transports didn't get that memo, and they were nicely green. So again, these things, don't. This is why you just got to follow the charts and the headlines and the narratives. Unless you're an expert at macro, and I mean a real expert, a lot of the time those things are just going to get you chopped up. But in any case here, Dow Transport's still holding up, and they're seeing money rotation. So again, don't fight these trends until the charts tell us to. All right, interest rates here. Interest rates remain firm despite a Goldilocks PCE number on Friday. And I've been telling you guys that I don't think rates are going to, even if we get Goldilocks data, I don't think the rates are going to go that much lower. We saw a little bit of a steepener on Friday, but to be fair, we've seen this, and this is the 210. We've seen that a bunch of times, and it has amounted to nothing. So we'll see if it's for real this time. But you can see here the twos were fractionally higher. They held the low. And then as we go up, the fives, tens, nice wedge breakout by the way on the 10, and the 30s obviously got a bigger bid. So curve steepening there. That can be a tailwind for stocks too until it completely uninverts. But we'll talk about that if and when we even get there at this point, because we've been talking about the yield curve uninversion for a long time. By the way, 210s have been inverted now for 2 years, if I'm not mistaken. Let's actually look at that. So here's your zero line. Yeah, there you go. July, there you go. July 1st, 2022. So, and then here's your, this is the 3-month 10-year, just for reference. That's October. So we're coming up on 2 years on that one. I think that's one of the longest in history, if I'm not mistaken. All right, XHB was on the weaker side this week. I do not like home builders as much as everything else. So this is a sector I don't like. I don't like how you have essentially equal lows here with lower highs. Doesn't mean it can't firm up, right? If it firms up, this could easily just become kind of a zigzag and then a breakout, a continuation pattern. But I don't like the lower highs with the equal lows. If this backs off, though, I mean, this could easily just shoot back down to this trend line, and you got a lot of support in this area. But XHB, a little bit on the weaker side this week for sure. VNQ, this chart looks a little softer than it actually is. It paid a dividend on Friday. We can look at the IYR, which is essentially the same thing, and this pattern's actually holding up. If you follow XLRE, it's also the same thing. You still got those higher lows there. Again, it's a similar pattern here. I've talked to you about this. If this can just consolidate this up move, it can break out. So REITs, I think I like better than home builders. So a little bit of a mix there as far as real estate is concerned. All right, financials, XLF here, kind of a choppy week. Again, still has higher lows, and it's holding up. The real story came from KRE on Friday, so up 3% on the day. And, we could be seeing a situation where heavily shorted stocks start to do well. Perhaps that's why the IWM is bidding up. We had Roaring Kitty, again, pumping another stock earlier this week by posting a picture of a dog emoji. I'm not making that up, by the way. The stock was up like 40% intraday and then came back down. Maybe there's a thing going on here where the next move is that people are just afraid to be short, and that's how you get a blow off. It's certainly possible. Rivian had a deal with Volkswagen earlier this week. That stock had a big bid, up 50%. It did come in off the highs pretty sharply. But again, just some food for thought here. But KRE up big. I like KBE. I've been telling you guys about this every single week. As long as you're inside of that green candle, this can be bullish up to 52. So KBE may be getting ready to break out. Broker dealers breaking out of this little flag pattern. It's just still a little stretched on the monthly, but outside of that, no problems really. Oil here continuing to grind sideways. It tried to break out on Friday, pulled back in. So this trend line acting as resistance. And that 618 I told you about is acting as resistance as well. Typically, oil goes up into July, okay? And then it kind of tops out. So just be aware of that. By the way, the debates were a disaster. I'm not going to get into politics, but I'm not going to bet on higher oil prices into the election in a general election year. That's just my thesis right now, unless you get geopolitical stuff. I do think gasoline can go higher, though. This is RB gasoline futures. There's a lot of shorts in this, and I think you could get one more squeeze. You could get one more squeeze in oil too, but I don't think I would be really surprised if they don't try to push this down into the election. Just my 2 cents. That doesn't mean that XLE is a sell. You can still see rotation here as long as prices don't, right? They don't need oil to crash. They just don't need it, don't want it breaking out, right? And I do think funds are underexposed, and I think they are starting to accumulate here. Again, I was really looking for a Pierce of 87, 86. We didn't quite get it. And now we're starting to peak above that channel there on the XLE. If this can consolidate this little up move inside bar, it can push up and make higher highs. Same thing with the XOP, same exact pattern. That one did get down to support, and then the OIH essentially did as well. That actually had an outside move on Friday. Still got a lot of resistance up here, but patterns are better, and I think we're starting to see that rotation now. Uranium here backed off a little bit this week. CCJ had a really big outside move. I think this is end of quarter stuff. So Friday was a little bit weaker, but again, this is still fine on the weekly time frame. Same thing with the URNM and the URNJ. They're still okay at the moment, but the NJ is close to support. I don't want to see a weekly close below 22.92. Nat gas here backed off again this week. This is into some support here on the Q contract. If this is down Monday, I would be semi-interested in a play. But it would just be a bounce play. I think as we get towards the latter part of the summer, it can have another leg up. But right now, on the weaker side, I told you guys to be careful about being long once we get into that second week of June. And when did it top out? June 11th. Dollar index here continuing to hold up. So a flat week, but nice big up move, pullback pattern. And this is getting ready to break out. There is a lot of resistance up here, though. I should say, let me take that back. I don't think it's quite ready to break out. There's a lot of resistance right here and a lot above that. So I think it's going to need to consolidate this move, but then I think it will break out to new highs or local, 52-week highs, we'll call it. Gold still in a range here. Bear flag started to break down, but then it kind of failed a little bit here. So if they can start to break this back up, I think gold can have a run. I still don't think it's quite ready though. I'm looking at more towards kind of August, I think, for gold, but the weekly chart is just fine here. So no problems. Silver backed off a little bit as well. And again, this 20 MA on the weekly starting to catch up to price. I like that. Needs to do a little bit more, but once it consolidates enough, it will go higher. Platinum here holding up as well. So higher lows, I like that. Finally getting consistent higher lows now and higher highs now. I think the lows are probably in on platinum. Palladium, looking at a little double bottom. I think this is getting ready too. But it's been in this range for a long time. But I don't see really much, us going much lower here than, 850. Then copper here, I'm still waiting for 425. It's almost there. Maybe even a little bit of up here. But good pullback for copper. It needed that. Bitcoin here still holding up, but now looking at possible bear flag here. So we had a little dump. Yeah, this was Monday. We had a little capitulation on Monday, and it's getting a bounce right now. But what we don't want to see here is continued sideways action, because that could set up a bear base. I'm a little neutral on it right now, at least in the short term. Big picture, again, it's still doing monthly consolidation. And again, 20 MA has just got to catch up. So this can just hold up here, and then it can go higher if that's the case. In the short term, I'm not sure. I think I could see it going either way. Bitcoin has a history of these bear flag patterns failing, right? We've seen that before. Right here, you had a small one, 3-day down move, 3-day bear flag, and then an up move, and then that led to a mega rally. We had this big one down here, big down move, sideways, setting up a bear base, and then it failed. And then before at the lows, down move bear pattern, and then that was the low as well. So we'll see. I mean, trend is still up. Weekly is still very strong, and the monthly is still very strong. So I don't really see any problems here in the big picture, but it did, it backed off this week, and just be careful with it in the short term. I can't see it going much past 55 in the next 2 weeks, though. I will say that. If it tries to break down, I think it gets bought up pretty quickly. I think it needs to do more bear basing if they're going to have a bigger move to the downside. So again, markets here continuing to hold up. Oh, by the way, we're going into a holiday. We do have jobs data this week, but we are going into a holiday. And that's part of kind of the bull thesis here as well. I talked about this late last week. The bears have a little bit of a window, but they needed to damage the chart this week, and they haven't done that. Why do I say that? We're going into a holiday week. So the big boys, the institutional players, by Tuesday afternoon, they will be in the Hamptons. So they're not going to be around trading this market on Wednesday, where market's going to be closed Thursday, and they are not going to be in the office on Friday. I promise you that, unless a geopolitical, unforeseen macro event, bomb goes off. They're not going to be in the office. And what does that mean? It means volume will be light, participation will be low, which is not conducive for sellers. It's not conducive for a sell-off. So by Tuesday, Wednesday, if we're still consolidating here, I think we can push up and make another leg towards 5,600. That's my base case right now. Again, barring geopolitical macro stuff going on. So just be aware of that. Trading volumes will be light this week and participation will be low. So only take the best setups if you're in there day trading, because you're not going to have that institutional participation there. So anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Come find Jason on Patreon, and I will see you guys all next week.